Mutual funds. They are very popular when it comes to investing for retirement, but you might need to be a sleuth to find the hidden fees associated with them. Our resident investment detective, Jim Lineweaver, is here to reveal his investigation results. Jim is a certified financial planner professional with the Lineweaver Financial Group. So welcome back to the show.
Thanks for having me.
Now, I thought that these disclosed costs of mutual funds were always revealed to the investors.
Well, I guess I should have brought my Sherlock Holmes hat, but I forgot at home. I apologize. But some of them are, and some of them are not. So that's what we're trying to get to the bottom of. And by the way, mutual funds can be great instruments for people to invest in retirement because they do give you diversification. You have a professional manager. We even use them in some of our portfolios that we manage. But you have to really be careful to pull back, or peel back the onion, so to speak, look at those internal costs because what happens over time, they can erode your wealth. So there's transaction costs, there's actually administration costs, there can be 12B1 fees, there can be front or back end loads. I mean, these just add up, and over time, it can definitely cause a problem if you're just not aware of it. And the average mutual fund expense is at 1.19% per year. So it can be a detriment if you're not careful.
Okay, and mutual funds are group owned. So does that mean that these fees associated, you might get charged fees from other investors?
Yeah, you're all in a pool.
Okay.
So you're all kind of be treated the same, okay? Because that's one of the beauties of a mutual fund. You get diversification, but you also have to share in the costs. So there's basically three costs when it comes down to it. One is when that money manager wants to buy or sell a stock, or a bond, he has to pay a commission, okay, for that trade. That's one cost. The second one is he may go to a market maker. That's somebody that's going to actually hold all those securities themselves, and they're going to make a market in that security. So what they're going to do is they're going to kind of buy in at the what's called the ask price, and then they have to sell it at the bid price. And that spread inside there is that market maker is going to keep. So that's another transaction cost that's inherent, not disclosed necessarily in the prospectus. And then lastly, they're trading they could trade millions, if not hundreds of thousands of shares at one time. That can actually, believe it or not, move a stock. You and I can't do it, at least that I know of. But when you're trading that kind, maybe hundreds of millions of dollars at one time, you can move the stock. Now, gradually in a few hours or a few days, that may normalize itself. But needless to say, depending on what side you're on, it could also add a loss to the underlying fund.
More costs. So how about tax inefficiency? Is there a cost for that with mutual funds?
There is. So not only, at the end of the year, a mutual fund that's not in an IRA, it could just kind of blindside you and give you a $20,000 capital gain that you're going to have to pay taxes on. And I didn't expect that. And it got reinvested, so you may have to scramble to get the other money. But what people don't realize is, let's say you buy into a mutual fund and it has a stock that it purchased at you're buying in and it's at $50 a share. Okay, that stock then goes down to 40. Lost money, the money manager wants to sell it. Well, that money manager might have bought it 10 years ago, and he might have only paid 30. So technically, that's a $10 gain. You bought it, you have a $10 loss. Yeah. Your investment went down. They had a gain. They're going to pass that through at the end of the year. You have to pay taxes on that, whether you participate in that gain or not. So that's where some of these hidden things can come in. You got to be careful.
So much to learn about mutual funds, but you have help, correct?
We do, yes, because a lot of this is going to be incorporated in the new tax laws and things. So, and how you can benefit or, make sure you're not on the wrong side of these type of trades and stuff. So we do have an education program coming up at Lock Keepers on May 10th and also May 15th at 5:30. We're not only going to cover these things, but all the new tax law changes and how it affects your investments and especially your income in retirement.
All right, sounds good. Our thanks to Jim for cracking the case on mutual funds. If you're interested in learning more about Jim's seminar, give the Lineweaver Financial Group a call. The number is next.
To find out more, call the Lineweaver Financial Group at 1-888-313-4009 or log on to www.lineweaver.net.